I, as your mortgage broker, are looking at, okay, what can we qualify for and what kind of house can we get? Your accountant is looking at, ideally, how to save you the most income tax. Those goals may not be aligned sometimes.
Welcome to Real Stories in Real Estate with your host, Denise Laframboise. Real people sharing real stories about their adventures in real estate.
Hey there, it's Denise Laframboise, and today I'm chatting with Mohamed Bachani. Welcome, Mohamed.
Thank you.
So you're going to share a story with us about buying your first home.
Yes, it was a very daunting process, but the process itself, but the decision itself, first of all, to go from renting to buying, it is nerve-wracking, but ultimately we were able to do it.
Yeah. Okay. And so do you want to tell us a little bit about, so you had your amount, right? You got your pre-approval and you had your amount and you were out shopping for a house. You found something that you liked.
Yes. So we found something that we liked, got the pre-approval and all that stuff, but unfortunately that didn't work out for a number of reasons. One was because I'm self-employed and self-employed with a corporation. So as we all know, with self-employed individuals, we don't declare too much in terms of taxable income because we are writing off a lot of expenses. So that pre-approval really was there, but that deal didn't work out. So we were back to square one after that. That deal didn't go through either.
Yeah, when you did that pre-approval, did they collect a bunch of documents from you? Like, did they have everything?
They did collect some documents, but not everything. They didn't collect some of the documents that were pertaining to the business, really, like bank statements or to show that we do have cash flow coming into the business. So it was just regular year-to-date numbers that we had from the business plus the personal income, what we were showing on our pay stubs.
Yeah, and then so then this is where we entered the scene because we did not do that initial pre-approval, and we took a look at it and said, you actually don't qualify for this. This is we're looking at a lending, and because of how your income is claimed, you actually didn't qualify for it. But
right.
But we have B lenders.
Exactly, and that's what happened is with the A side, with the way we were claiming the income, as you said, it didn't really work out, and it's just that either there was miscommunication previously or something of that sort, however it was, but then when you came on board and looked at it, the first time, in terms of the approval and all that stuff, the way we went in, you guided us or you advised us that it won't really make sense. But if we were to look at it the other way and go the B way, yes, the interest rate would be higher a little bit for the first couple of years, but the approval could be done if at all we were able to show that we have enough cash flow to be able to pay that mortgage, and ultimately we went back and forth with bank statements and deposits and invoices, copies of invoices that we were billing out and all that stuff.
Yeah, and so for people who don't know, like, self-employed financing is my jam. Like, I love helping self-employed people. And it's not always a one size fits all, because we will look at our A lenders, say our banks, and they can use some extra like write-offs and things, right? They can look at what your income is and then add in some of that, but it's often not enough for what you want to buy. And so then with yourself, what we did is looked at, okay, well, what will we need to do in order to qualify? And then we worked with your very talented accountant to make sure that you were going to, so in your case, we needed 2 years that looked like a certain way, right? Out of your corp into your personal, how it was claimed. So then we made a plan, a 2-year plan, 2 years with a B lender. And at the end of the 2 years, then what happened?
So yes, we made a plan with the accountant and with yourself, Denise, to make sure that looking forward 2 years, let's make sure that we're able to then qualify for the A side. First of all, we were able to qualify for the B side, got the mortgage, and then put the plan in place with the accountant and Denise yourself in terms of going there. And then once the 2 years were up, it was a simpler process, a very
Less documents.
very easy, exactly, less documents, less stressful.
But also we had planned ahead, right?
Yeah.
Plus, like a refinance when you already own a house is a lot less stressful than buying and doing the inspections and figuring out moving, and like it's a lot more onerous, especially when we're doing these planning ones. Because say we planned B, in your case, we moved lenders because there was a lender with another special, but we do have lenders who will do what they call a graduation program. So they'll actually move you from their B side to their A side, the ones that have both, without as much onerous documents and things, because they already know the property and they already know you as clients.
Right. And the good part about it is rather than fast forwarding 2 years, we actually touched base 1 year in. To ensure that everything was according to plan, and make sure that after the second year, upon renewal of the mortgage, we were on track to be able to do that, and which is what I really appreciate is that time taken by you to make sure that yes, you have a client on a B side, but to make sure that everything is okay and they're all going to plan. So yeah, that was really, really appreciated.
Yeah. And I mean, from your work that it's not always the case that we want to qualify A, right? Sometimes we're doing these meetings with the accountant and with the client and saying, here's how much you would have to claim to go A. And then the accountant's like, here's how much it would cost you in income tax. And then you're like, no, I'll just stay with the B lender. Like sometimes it doesn't actually make sense to do that. But I find with business owners, like it's not just rate and cost on the mortgage, it's cost globally, right? Because we have to balance the cost of how much income tax you're going to pay with what the mortgage is going to cost.
Right, and that's where it is a misconception that in a way you are trying your best to get rid of that misconception with a lot of individuals, but it's still there that the rate is the rate is king.
Yeah.
In terms of I'm looking for a low rate, but yes, there's a lot of costs involved in terms of getting that low rate. Are you paying thousands of dollars in taxes just to save a less amount of funds, less amount in interest?
Yeah.
So that's the way that cost benefit situation.
Yeah. So it's always like when people say, I want the lowest rate, it's like, okay, is your goal to have the lowest rate? So you have bragging rates at a party, or is it to cost you the least amount of money? Those may or may not be the same, especially when you're self-employed, because when you calculate out, okay, how much income do you have to claim and therefore pay tax on, or if there's costs associated, especially when you're incorporated, because now you have to balance like the corporate tax side versus the personal tax side too. And I guess that's why we're really busy at tax time, just like you guys, because it's important to me that people have the right information. It's not an exact science because we're estimating, okay, at a hypothetical future date, what is the interest rate and qualification going to be? But it gives us a good ballpark. And usually those numbers will tell you, like, if you have to claim 75 or pay an extra $75,000 in taxes to qualify for something that's going to save you $100 a month, does that make sense?
It doesn't, and that's where the whole thing comes in, that anyone who is looking for a mortgage needs to streamline themselves with, yes, with their accountant, but also with their mortgage broker, someone like yourself, to make sure that overall it's the everyone is working towards the same goal, in terms of saving funds, saving money, and not paying either more to the bank in interest or more to the government in taxes. Everything needs to be streamlined for that particular individual to ensure that they're getting the best of both worlds.
Yeah. And well, the thing is too, we have to realize, like, I, as your mortgage broker, are looking at, okay, what can we qualify for, and what kind of house can we get? Your accountant is looking at, ideally, how to save you the most income tax. Those goals may not be aligned sometimes.
Exactly, and that's where it comes in, that piece about streamlining and making sure that everyone is on the same page. That really is key, and the lines of communication need to be clear as to what the individual wants, what the and the accountant is also looking out for the accountant, and yourself that are looking out for the best interest of that individual. But if the individual is then keeping things away from, or rather keeping secrets, that you know what, I have this other debt that I didn't tell you about, then that also jeopardizes their position.
I find a big one with self-employed people. It's like, we make this plan and we're okay, here's our 2-year plan, 3-year plan, whatever it is, 1-year plan. And then it's like, oh, by the way, did I mention that I incorporated? Yeah, that's totally different. Like, how lenders treat sole proprietors and corporations, very, very different, right? So yeah, you have to be fully transparent. If you want a good plan, you need to have like all the clear inputs to go into it, and a team working together, right?
Oh yeah.
Yeah. And then, so when we, moving forward, so we got the house, we got the plan. I mean, when you think about interest rates now, it's really funny because that B mortgage, do you remember what the interest rate was on your B mortgage?
So when we went for it was, if I'm not mistaken, around 4%.
Yeah. Which is way lower than what A lenders are today. Right. But at the time, it's like, oh my gosh, we have to go 4% instead of 3.5% or whatever it was. That cost difference really isn't that much, especially because a lot of our B lenders have longer amortization. So your payment can be very similar. But the other piece of that is it allowed us to get into a house 2 years earlier than you would have been able to buy.
Right, exactly, and that's the main thing is when we first were when the first deal didn't go through, we were like, you know what, yeah, this year might not be the year that we'd be buying it. We're resigned to renting for probably the next 12-24 months. But then it was a conversation out of chance that we had.
Yeah, and I was like, no, we need to buy now. Like, yes, let's get it. Like, exactly. What did you buy that house for?
We got it for 330,000, and it's
like right 4 years ago.
4 years ago. Right now in the same complex, houses are going for 600,000, so almost double.
Like, how much overtime would you have to work to make that kind of money?
Exactly, and you know what? Hindsight's 2020, but the time that we got the house, it was yes, a year and a half prior to COVID. But if we were to wait 2 years, then because of COVID and all that stuff, the prices were on the high side at the time anyway. So it would we'd have to pay double for the same house.
Right. And I'm a firm believer, yes, prices are always going to go up and down. We can never really time the market, but if our plan is to buy and hold for a decent amount of time, 5 or more years, we're always going to make money on that house.
Oh yeah, and that's the thing. It's once we got into the house, it's like yeah, homeowners and all that stuff. Yeah, it was an exciting time after that nerve-wracking first deal that didn't go through, but uh, yeah, overall after that, it's uh, the first part went the first deal the second deal went on, and we were able to then get get approved 2 years later for the A side, which at the time the rates were just under 2%. So um, and overall with all the spreadsheet number cracking and the calculations and all that stuff over the 2 years that we had to maximize our personal earnings versus corporate and all that, we still found out that the B side and the B side interest that we paid and the tax, additional tax and all that we would have to pay and all that stuff that were pretty much equal. So which was on our end, it was a kind of a good thing at the time. So overall, I'm happy with the decisions that we made.
Me too. I think it's great. Thank you for sharing this with us. So in addition to this, we maybe have hinted on it. You also have a business. Do you want to talk about your business? What do you do?
So yes, I have a business. I'm an accountant, so I offer bookkeeping, accounting, and tax preparation, tax planning services. So yeah, I was able to work with you and on my own deal, which is really helping, or rather, which really helped me to understand that part of the equation to be able to serve clients better and make sure that overall with the relationship that we have built to help clients get into their homes or and also help clients with their planning so that they're able to get their finances in order.
Yeah, it's amazing. And so what type of services do you offer? So you said bookkeeping as well, because you do a lot of invoicing for self-employed people, right?
Yes. So most of our thing is geared towards bookkeeping and tax planning, tax preparation type of thing. So yeah, we offer invoicing for clients. We offer receipt and expense management so that they can continue working on their businesses while not having to worry about all of those receipts and expenses, and also invoicing. So because you know what, any late invoice that they send out to their clients is pretty much an interest-free loan that they're giving out. And you know what,
Yes.
any if at all the work has been done, then might as well send out the invoice and look to get paid, as opposed to looking at your bank balance and cash flow. Why am I low on cash when I'm so busy? But it's mainly because you've not invoiced them.
Something else that's really cool that you do, I don't even know if you know that I know that you do this, but is like job assessment. So you do a lot of invoicing for contractors, and I have seen where you have run scenarios for them to see if they're actually making money on different types of jobs.
Right. Yes. It's especially for contractors, engineers. It is important to look at it on a job or project basis and make sure that you know what, this particular job didn't make you money, or made you money, or you broke even, just so they can have a better idea of future jobs and projects, and if at all they need to mark up a little bit more, or something of that sort, they can do that with knowing that, you know what, yes, we can then make money out of it, or rather make some profit, so that we can be cash flow positive, as opposed to just running around doing all those jobs and ultimately not seeing any profits, because you're either breaking even or charging lower for every project that you're taking on.
Yeah, nobody should be working for free, right? And sometimes if you don't look at the numbers closely, you don't know if you're working for free. You don't know if certain type of jobs are making you more or making you less. And so I think that's a really amazing service you offer to people, especially our like contractor clients are. There's a lot of people who are very, very good at what they do, and maybe not as versed in the business side, or if they're really good at what they do, maybe they're so busy that they don't have time to do this stuff. It's really important that they engage a professional like you to be able to help them.
Right. And the tendency here, especially with all these job costing and all that stuff, is that yes, you're right. They're very good at what they do, but when they're pricing jobs, the tendency is that they don't look at their own time that they're spending and they're putting in. They just look at, okay, yes, I have two employees for this particular job. This is what I'll pay them. This is what the materials will cost, and this is what the total is. But if they're putting in their own time, whether it's administrative or actually
Even
going
just
on
quoting
site
jobs, thinking about all the time you spend quoting to get that job.
right,
If they're
exactly.
doing their own invoicing, like you're staying up at night every night sending out invoices when your kids are asleep, like that's not reasonable, right?
Right. Either late night, evenings, weekends when they'd rather be with their families, or out and about with their friends. That's not the ideal time to do it. It's yeah, it's just it's a waste of time actually.
Yeah. So if people have questions for you about invoicing, accounting, self-employed, maybe they just want to call you and tell you that they went through the same thing you did, buying their first house, or we want to look at income planning to get them out of a B lender or a private lender. How can they find you?
So my business name is Unique Accounting Services. They can either go onto our website, uniqueaccountingservices.ca, or send me an email, or give us a call at our phone number 905-903-7669.
And you have a nice office in Oshawa, but do you where do you serve clients? Like who geographically, where can you help?
Geographically, we can help pretty much anyone in Canada, with the exception of Quebec. But anyone in Canada, we can help them out, and make sure that they're saving on their time and taxes and all that stuff, because everything is now cloud based, so they can take pictures of their receipts and quotes for invoicing, and just upload them to either our servers or the apps that we have subscriptions for, and they get uploaded onto our side in real time, and we can still help them. So distance is not an issue, but most of our clients are Ontario based, GTA based. We do have clients in other provinces, so which is why Canada wide is we can serve everyone.
You can fight with CRA anywhere, eh? Well, I appreciate you so much for sharing this. And I think your story helps a lot of people. I never want to see somebody think they can't do something or be told no and think, okay, I'm just going to give up, especially not if they could have made hundreds of thousands of dollars by buying a home sooner. So,
right, exactly.
So I thank you so much. This was really helpful. And if anybody has any questions for Mohamed, they can reach out to Unique Accounting. And this was a Real Stories in Real Estate podcast. I'm your host, Denise Laframboise. You can find this podcast anywhere that you consume your podcast, Spotify, Amazon, iHeartRadio, anywhere else. And have a great day.